the asset that will turn 30x in a heartbeat. Jim Rickards. From 1971, when the U.S. ditched the gold standard, the price of gold skyrocketed from $43.50 to $1,824 at the end of 22. That's a 41x increase. Gold has been relatively stable between 2020 and 2022 as its price mainly traded above the $1,800 mark. The question, though, is what will gold do next? Will it remain stable or explode as it did between 1971 and 2022? Welcome to today's video. We are going to go into detail on the thesis that gold has the potential to do an easy 30x over the coming years. The world is at a major turning point, and gold could be at the center of it. To get to the bottom of the matter, there are two questions that we will need to ask and answer. First, how did gold find itself at the center of a major global turning point? Second, where will gold get the momentum to go to the moon? The current geopolitical tensions could be the catalyst that gold needs to reach new all-time highs. James Rickards, a famed investment advisor and economist, predicted that gold is set for a memorable run. It is not every day that gold and the phrase "going to the moon" are used in the same sentence. This is an honor reserved for volatile and risky assets such as Bitcoin. Gold has always been considered a safe haven asset. It is used as an inflation hedge as it has a history of maintaining its value. While all this remains true, gold could be a game changer for investors. Let's start with James Rickards' predictions. But before getting there, let's go over his credentials. He is the director of the James Rickards Project, an inquiry into the complex dynamics of geopolitics and global capital. He is the editor of a financial newsletter called Strategic Intelligence. He has written at least 7 books, including a U.S. national bestseller on finance and precious metals. James has contributed to several top-tier financial websites that you can think of. James says that gold is another form of money that people use to express their lack of confidence in the dollar. When people lose confidence in the dollar or other fiat currency, they turn to gold. This is what partly causes the price of gold to rise. As the price of gold rose from 1971 to 2022, the purchasing power of the US dollar decreased over the same period. For example, $1 million in 1971 is now worth $7.3 million today. We will get back to this later. James elaborated that gold will go to the moon, but will not go there without corrections as high as 50%. He has predicted that gold will reach a price of $15,000 an ounce before 2025. An ounce of gold weighs 31 grams, or you could say there are 35.2 ounces in a kilogram of gold. James says this $15,000 prediction is carefully thought out. This is how he got to this figure. He gives examples of 2 gold bull markets. The first bull market was from 1971 to 1980 with returns of 2,200% over 9 years. Another bull market period is between 1999 and 2011 when gold registered gains of around 700%. This was a 12-year bull market. By taking the average of the 2 mentioned bull markets, James says the next gold bull market will last around 10 years and will go up 1,500%. He cements his argument by stating that the current bull run started in 2015 when gold hit a low of $1,050. At the current price of around $1,800, James says that gold has only appreciated by just under 50%. This is too far from the 1,500% surge that gold is projected to hit. He also argues that the price of gold can be predicted by assuming that the monetary system will return to the gold standard. To achieve this, there is a need to divide the total money supply by the official amount of gold, which is roughly 34,000 metric tons. Again, this would lead to a gold price of $15,000 per ounce. He says his predictions are very conservative. James states that the price of gold could even rise as high as $50,000 an ounce. Let's get back to how confidence in the US dollar influences the price of gold. The 2007-2008 financial crisis was caused by a housing bubble crisis. Central banks bailed out banks. However, James argues that the debt is now at the central bank level and there is no one to bail them out. The viable option will be to turn to the International Monetary Fund, known simply as IMF. He calls it a slow and difficult fraud process. He says it could result in shutting down the banks. If this happens, it could destroy the confidence in the dollar. He expects gold and gold stocks to do well in the future. James's sentiments are echoed by Peter Schiff, a gold bug and Federal Reserve critic. Peter says the government or the Fed have bailed the economy by creating inflation. He claims that the government can try to stimulate the economy by printing money. The U.S. Federal Reserve printed more than $3 trillion in 2020 alone. This obviously caused inflation, which the Fed is trying to fight through interest rate hikes. Schiff says that inflation is much higher than it needs to be. This is a game changer for investors. This is because what worked when inflation was low will likely not work in a high inflation environment. As highlighted earlier, this could increase the demand for gold. The principle of supply and demand makes it clear that the price of gold will go up as the demand rises. The demand for gold is also coming from unexpected players, central banks and governments. The demand for gold reached an 11-year high in 2022 due to buying pressure from central banks and retail investors. China, Iran, Russia, and several other countries are stockpiling gold in their reserves. Russia's gold reserves are on the rise over the past years due to de-dollarization efforts. Russia is estimated to have about 2,300 tons of gold as of 2022. This is up from about 800 tons in 2010. This makes Russia the fifth largest owner of gold in the world. China has also taken a similar route. The Asian country now holds more gold in its reserve than US dollars since 2021. China and Russia are doing this as they try to move away from the US dollar standard. The US dollar serves as the world's global reserve currency, giving the US the power to weaponize the dollar. This is what some countries are fighting against. These de-dollarization efforts, coupled with high inflation and the gradual loss of confidence, gold now has a real chance of skyrocketing as investors turn to safe haven assets. Another real factor that should not be undermined is the demand for gold by retail investors. Retail investors have been a driving force for major pumps of several stocks. In 2021, retail investors propped up Game Boy's stock price in what Jim Cramer called the squeeze of a lifetime. If this army of investors is ready to dabble in gold, then precious metal might be going to the moon. So how do all these pieces fit together to give gold a 30x run in the future? That's because everything is interconnected. When one clog of a machine goes down, the whole machine is affected. People and investors are slowly losing confidence in the US dollar. This could be due to high inflation and interest rates. The demand for the US dollar was very high during the 2022 bear market as the majority of risky assets lost more than half of their value. While the general sentiment is yet to completely change, investors might start using gold as a store of value. James Rickards has postulated that gold has been in a bull run since 2015. Gold has performed tremendously well between 2015 and 2022, and James notes that it still has some fuel in the tank as he estimates that it will rise to $15K before the bull market cools down. Major central banks are stockpiling gold. This removes a huge amount of gold from circulation and in turn drives its price very high. In short, here are the reasons why gold might go to the moon. 1. Gold's bull market is far from over. 2. People are losing confidence in fiat currencies such as the US dollar. 3. Banks and central banks are aggressively buying gold. The conditions are ripe and conducive for gold to have a run that will surprise many people. Like several bull runs of the past, this projected 30x run will likely catch many investors unaware.